This talk is supported by Small PDF, the successful Swiss scale-up making PDF easy for over 1 billion people around the world since 2013. You may remember them from a previous podcast we hosted with their CEO, Dennis Just. Their mission is to make PDFs and life easy for people across the world, a mission made possible with their 90-plus amazing employees across Zurich, Belgrade and Barcelona. If you want to join this fast-growing Swiss scale-up, visit smallpdf.com/Swisspreneur and apply.
I think we've had cases, Martin, where we did take up almost too much responsibility, for example, in terms of financing. And it became almost too easy for the entrepreneurs to raise money.
Welcome to the Swisspreneur Show, a podcast about startup stories and learnings from experienced entrepreneurs. Here's your host, Sylvan.
Philippe, Martin, a very well welcome to the Swisspreneur Show. It's a pleasure to have you here today.
Thank you, Sylvan.
Thank you very much.
You're the co-founders of Session.VC, a fund investing in early-stage companies in the software and consumer space. And before we talk about your fundraising and your investor journey, we of course want to start with your personal background. So Philippe, you studied business administration and finance at the University of St. Gallen here in Switzerland. Did you ever dream of an entrepreneurial career back then?
I never had a clear plan of what exactly I wanted to do. What was clear is that I wanted to be independent and free, and I wanted to be successful and make money. As a teenager, I was very much into music. I played guitar in different bands, but I was also fascinated by the stock market. So I think it was kind of the creativity and the analytical thinking, the two things which I was interested in, and being entrepreneurial, I think, was a consequence out of that. But it was, whatever I did, it wasn't really planned. It was about grabbing opportunities that just presented themselves. And after many twists and turns, where I ended up is where I am today as a VC investor.
So there's no master plan. It's really one door, one step led to the other.
Absolutely.
Great. And for you, Martin, where does your entrepreneurial drive come from? Did you have any role models in your family, or what inspired you to become an entrepreneur?
I think I'm slightly different than Philippe's one. I didn't plan. I had virtually no plan. My parents were academics, and they were keen for me to go to the university and make a study. But I had my first company when I was in college, and was kind of growing into entrepreneurship by just starting my own business in the parents' house, which was a bulletin board system in the late 80s and early 90s. So honestly, I don't know where the entrepreneurial spirit comes from. I would say I was just growing into, and then became fascinated and passionate about mainly the technology side of things.
And what motivated you to start your first business back then? Was there any particular problem that you saw in the market, or was it also technology driven?
Well, this was the time before the internet, and there were these bulletin board systems where you were calling around with your computer, and you had a modem attached that made strange sounds, and that was a very costly exercise if you were calling those bulletin board systems across the world. So my motivation was virtually that I said it's a nonsense that I just call those people. They should call me. And the only way that they called me was virtually to set up a bulletin board system, and that's at the end what I did. So I built this bulletin board system in order for the people to call me, and the rest was just coming automatically. So I soon had my brother working for me, and then I had my family helping me. So it was just growing. It wasn't planned at all.
You sort of solved your own problem there, right?
Yes. Yes. I'm a person that I don't read manuals. Still today, I think if I have to read a manual, it's a bad product. So I learn by just doing stuff and making the experience. And sometimes it works and sometimes it doesn't.
I can very much relate to that. My girlfriend always tells me, you should read the manual because otherwise you break the system again.
You see, and I would say if you have to read the manual, buy another product.
I fully agree. I will tell her that next time. So you're both sitting here. So Philippe, how did you actually first met Martin? When was that, and how did that happen? Because the two of you have a very fascinating story, but we want to start at the beginning. So where did you meet for the first time?
I don't remember. Martin, do you?
Maybe in the sandpit.
Yeah, I mean we grew up together basically, and so I mean we were, as teenagers, we were playing on the streets and did, you know, everything that teenagers do. And then came the point where Martin disappeared into the attic of his parents, basically starting his startup that he just spoke about.
Yeah, well, we must have met in primary school.
Probably,
that must
yeah.
Between kindergarten and primary school, and there was on and off. I mean, there were times where we haven't heard from each other for a few years, and then there was a phase where we.
Yeah, I think we connected again when you called me when you had your company and it was already successful, and he said you should have joined me and not
studied.
Not study at St. Gallen. Yeah.
What did you answer to that statement?
Well, I don't remember, but I think that would have definitely been a good alternative as well to join Martin at the time.
And then actually later you then decided to join forces and work together. What happened there? When was the right time when then said, hey, let's work on something together?
As far as I remember, it's something that just happened naturally. There was little planning. It was the time of the internet, the first .com boom, when I decided to that investing in young startups was a great idea, and Martin was the one who knew something about the internet. So we joined forces and started investing. Some of those investments were successful, few actually, because in March 2000 we had the big crash, and so we also lost quite a bit of money. Made our first lessons, and then I went back into investment banking, and Martin did another startup, which I was partially involved, and that's how the story continued.
And if you look at your setup, what actually makes you a good team? Do you have any particular values or skill sets that you say, hey, that's actually the ingredient for a successful team that you both together bring to the table?
If I have to think clearly, I think many times we have mutual understandings. I mean, we're totally alpha animals. We both like to be right and to lead. We have totally complementary skills, and I believe we have the ability to fully trust the other in his space. Mm-hmm. And I remember a lot of occasions when I tend to get kind of emotional at some point in time, and he's the one that can actually bring me down to the rational level. And I think it sometimes happened the other side as well, when I remember...
The other way around, yeah.
When you had the on story and you were sometimes really at the edge of getting crazy. My job was to make sure that he's landing back on the feet. Mm-hmm. And if we have to, we trust each other just 100%, and we know what skills the other has.
I think it's fundamentally it's really sharing certain values. I think that's what's really fundamental, and then the different skill set that's complementary. That's the thing that adds on top of it.
Have you ever explicitly phrased out those values that you share that are important to both of you, or is it more an implicit thing because you grew up together? It's working very naturally again.
No, I don't think we've written it down, but it's I think it's a combination of honest, being honest to each other, and being humble, at the same time being passionate and wanting success, having a big dreams. I think this combination of going for something, but then at the same time being relatively humble about it. I think that's a value that we share, right?
Yeah.
And how do you split the skill sets? So you said before you have complementary skill sets. So how do you split the tasks and the roles?
I would call myself still a little bit of a nerd. So I would say I'm the techie, architectures, products, defining services is clearly my space. I still do coding and building hardware. Well, I think you is if I have strategic questions and questions about financing, he's the master. He's just extraordinarily good in doing that.
Yeah, I don't do hardware. I don't code.
But that seems like a very good split, right? Because usually you say you need to have someone who can actually build and someone who can sell. And I mean, that the whole finance part also goes in that direction, that you need to be able to sell and have the business side in order. So that's a great combination.
Yeah.
Now, if you look back at the early days, you already worked together for more than 20 years. And you mentioned before you invested in early stage companies back then, for example, On or Bexio, some of the big names and successes that you've had. So first of all, how did you get access to those deals back in the days? Because nobody knew that those companies were going to be a success. So how do you get access? How do you get a seat on the table?
On my side, if I look back, there was not really a super structured approach, and you can also see that in the different ventures that we did. It was really about keeping your eyes open, speaking to lots of people, exchanging ideas about interesting startups or interesting opportunities in the market, and then again about once you find something, is running with it, going for it and doing it. And that's really what it was. And with On, for example, it was really also a friendship with one of the founders, and so he approached me initially, the three approached me having the idea of starting a running shoe company, and that's how it happened. So it wasn't a structured approach on my behalf or anything.
Mm-hmm.
We sometimes we think about ideas ourselves, and it can happen that we think about an idea for a very long time, and then suddenly someone appears with who is executing that idea, and this typically brings you in a good situation when you talk to those entrepreneurs, because you understand what you're talking about. And for me, that's the key thing. I personally need passion, and once we then have a startup that goes into the direction of something that I have a passion for, I do everything to get into and help them to make a success.
Did also your personal experience or your personal network from your entrepreneurial career before help you to get access to deals?
I think yes. I mean, the answer is clearly yes, because if you put yourself in a room and close the doors and don't go out, there's unlikely that someone will find you. But again, before we had Session.VC, I would say we haven't even made a great deal about a deal flow. There were times where we had some deals, but often it was really that we were going out and figuring out what's there, and we were trying to identify the deals ourselves, mm-hmm. based on the interests and the knowledge and the passion that was around.
And Philippe, you mentioned On that they approached you. What were your initial thoughts? Because everybody thought in the beginning that they were completely crazy. Even Kaspar told us on the Swisspreneur podcast that when his friend told him that he wants to start a running company with new shoes, he said, you're completely nuts. Like, it's never going to work. What were your initial reactions?
I think they were similar. There was definitely not, that I saw this as what it became. I remember that what we said is, either this is going to turn out to be a success or we're going to have running shoes for the rest of our life. That's kind of how it started. And so there was it wasn't that I had any vision.
But still, what convinced you to then put money on the table and invest in the company?
Right. So I think that was a combination of things, and the most important one is the team. and the fact that they are very complementary, the three of them. And then there are some other aspects, but maybe that's just the 2020 hindsight approach when we start to think about why you have probably invested, and that is that it's a huge market. So there's a huge addressable market. There hadn't been any innovation in running shoes for a long time. That running shoes all looked the same at the time. There was no minimalistic design like the one that On came with, and it was also in some way it's a recurring business model, because the shoes, they do break at some point and people need to buy a new one. So I mean, these elements, these characteristics were interesting as an investor, but I don't think I did think about those too much at the time.
So it was really the founding team that
really
convinced you.
Yes.
Yeah. And Martin, of course, when you invest, you also need to invest money. So where did the money of your first investments come from? Did you invest your personal money? Did you also have investors already on board back then?
I was fortunate to be able to sell my first company. So my first company was not bootstrapped, but I had minimal external capital. There was one guy contributing, I think it was 150,000, and he made I don't know how many millions out of it. But I was fortunate to sell my first company when I was 29, and I then had enough money to actually make my own deals. And I never was someone to put all my wealth into one basket, except for the first business where I had no money. But mainly it's my own money, yes. And I got it from the first company.
Perfect. And how was that for you, Philippe?
Well, I didn't have any money, so or not that much, and I mean, the little that I invested, I think I remember I borrowed some money from my parents, and I had to pay that back, and that took me quite a while. And I think I was 32, 33 when I paid it back. So I had quite some experience also, not having money, losing money, going through these difficult periods in the beginning.
And borrowing money to invest in startups,
it's not a good
idea
that generally.
Cause sleepless night for you?
Yes, it did, and it's generally not a good idea, but it's what I did.
Well, it all worked out in the end, but still,
exactly,
that's quite risky.
Yeah,
for me it was the total opposite. I mean, I would have never ever gone to my parents asking them for money, because their expectation was that I go to university and make my studies and not start the business in the internet with total unclear outcome. So I think I would have never ever gone to my parents asking them just for 1 franc.
Yeah, I just had to. I didn't have any alternative.
Of course.
It worked out well.
Yeah.
Absolutely. And one thing that you do, which is quite eye-opening, what you also state in interviews and on your website, is that you take a really active role as investors. So how active were you, and what does active actually mean when you invest in a company?
Well, active in my case means at some stage becoming operational. I can make an example in Bexio. When they had issues with product management, I was virtually stepping in for half a year and actually taking an operational role just to go out later. So we're ourselves not too good to actually roll back the sleeves and do real work. Although at this point in time, we try to prevent becoming extremely operational. But it's much more than just a board meeting or a call every 3 or 4 weeks. With most companies I'm responsible in the portfolio, I have almost daily interactions.
Wow,
so it's a lot. It's really a lot, and you always have to balance between the kind of company. In some companies you should give, or you have to give more advice at certain points in time, and other companies they can do it themselves, and it's more negative when you involve yourself too much.
Mm-hmm.
I think what is always important to me as an investor is just to be very clear that as an investor, you're not a founder, you're not part of the founding team, and that you should also not take over too much responsibility. And I think we've had cases, Martin, where we did take up almost too much responsibility, for example, in terms of financing, and it became almost too easy for the entrepreneurs to raise money, and so they didn't get quite accustomed to the fact that it's tough, and later that you can run into problems with that. So I think having a certain distance is important. It's something we had to, or I at least had to learn also over time.
That sounds like a very tough balance to strike, right? Because
exactly.
You want to help them to succeed, but you also don't want to make the company too dependent on you.
Yeah.
So that can be tricky.
And also in terms of success, you're not the founder. You're in the end you're the investor.
Yeah. We had examples where we were kind of almost operational, and I think we delivered great value in our own perception, in a way that we helped them create services and technologies and products. But it didn't help them at the end, because we were dumping this stuff virtually in the company, and they weren't able to pick it up and use it. So in that sense, you can become too operational, and at least myself, I struggle still sometimes when I'm in contact with the founders or having a meeting, and I exactly know what has to be done, and I know I can actually just pull the drawer and take it out, and it would be worth half a day effort, and then it's there. Mm-hmm. But you have to take yourself back and just try to help them achieve the same result. And maybe it takes 2 weeks or 3 weeks instead of half a day.
Right.
But at the end, they at least have done it themselves. And we've done mistakes in a way that we have been too operational and sort of too helpful that it turned out to be a negative help.
And when you actually get into the operational role on top of your investor role, do you also ask for any compensation in form of cash or shares, or just do that out of a pro bono because you're already incentivized with the shares that you already own?
Yeah, first of all, so the operational role, I think that's not what we do on a regular basis. Yeah. That's just, that happened once at Bexia. I think it happened once at Nutmeg, but it's not the normal. It's not the normal case, and we never ask for anything special, any compensation.
We don't charge anything. There's no charges for board meetings. There's nothing. This is probably special, but that's one of the USPs I think that we have. We provide really, really deep operational excellence and knowledge.
And I mean, that's basically possible because you already have skin in the game. You're sitting in the same boat. You want to see the company succeed, right?
Yes.
So then in 2019, if we fast forward a bit, you then decided to found Session.VC. And you actually said, hey, it's now the right time to have the official, name and also the brand out there, to have your own VC fund. Why was 2019 the right moment to take that step?
I think there's a couple of reasons. I mean, one is that we had a few successful exits, and we were about to make new investments, and we typically had other friends of ours follow us into investments, and we didn't want to do that in a non-structured way. Mm-hmm. Again, so that was one of the reasons, and then I think the whole game of investing into startups just became very, very different over the last couple of years. So 10 years ago, there was little competition. You didn't really need a brand, and these days it's just there's so much money. So that you need to position yourselves. So we decided to form something in a structured way, and that's why we ended up starting Session.VC with which is our money and the money of friends of ours. So there's no institutional money in there.
And how do you then structure that? Is it like from a legal perspective? Is it really a fund?
Yes,
or?
It's a fund.
Okay.
Yeah, it's a Liechtenstein-based fund.
Perfect. But that also brings quite some overhead, right? I mean,
yes, and it's not as much as in a Luxembourg fund, but yes, but it also, I think, it gives investors the security that their money is managed in a professional manner, and it also gives you the opportunity to scale, and that's what we're going to try and do.
Fantastic. And Martin, you actually focus on the software and consumer space. Why is that the right vertical for you to focus your investment thesis on?
Because we understand it. It's really simple. I never touch stuff that I think I have absolutely no understanding. Now, Philippe's space, he's very strong in the consumer side. That's not particularly my strength. I'm more on the software and SaaS side, and I've built software and SaaS companies all my life, and I'm struggling to see any value in eras where I have no experience. And the approach that we have when we go to the companies and we tell them, we're able to help you, and then it turns out after the second meeting that you have no clue about anything that they're doing, it's questionable whether you can really help them. Yeah. So we do stuff that we think we understand and we can contribute a certain value.
Mm-hmm. And at the same time, you also focus at early stage companies. Why is that the right focus besides the software and consumer space?
One reason I think it's the most fun. It's where we can, I think, contribute the most. It's where you get the most bang for your input. All right. Obviously, there's lots of ups and downs, and I think the challenge for us is that it's something that we deal with all the time, and we ask ourselves how to do it is how can we scale ourselves better, because early stage startups, they do take up a lot of time, and we can't manage a large portfolio, just the two, and now with Jeremias, the three of us, and that's something that we struggle with. We're working on that. We're building different systems, putting different systems into place, but I think that's the downside of working early stage, is that you can't really deal with a lot of companies.
No.
For me, the early stage is fascinating. The phase where you probably don't yet have product market fit, mm-hmm. is for me an extraordinary interesting time for every startup. You don't know whether you can make your sales explode. Sometimes you don't even know whether you can sell the product. And the decisions and the help you can provide is enormous. When you sit in a board meeting or you have a discussion with a founder and you discuss something and you come to a conclusion, the founder can virtually go back, and the day later they start executing against it. When you have later stage companies, you really become the investor because of the money. So they need the money to grow the business, and the involvement and the value add and the influence from the investor is much smaller. The influence that we have in the startups, particularly if we understand something about the space, is really something different. And you can monitor every month the progress, and the progress is huge.
I can imagine that's also very motivating to be part of that story. That's a lot of fun.
Absolutely. It's rewarding, but it can be frustrating at the same time, because sometimes you're trying very hard to do the right thing. You believe you have a product that has a perfect market fit, and you can just not sell it. So you have to go back to the drawing board and try again if you have enough funds. But this is the interesting bit, and sometimes it works and sometimes it doesn't.
Yeah. And Philippe, besides investing in early stage startups, you actually also start projects with a sole idea. I think you call that Session Lab. What do you exactly do there, and how does that work?
So as Martin said before, we ideate a lot around topics that we find interesting, and a few times in the past we have thought about starting our own startup in a certain domain. One example, and I think you Martin, wrote a blog about it, was Nutmeg, was the topic of robo-advisors, which we wanted to do ourselves, and then we found Nick Hungerford, the founder, who was already doing it in the UK, and we invested there as angels. And that is something that we want to do on the lab side. So we write our own business plan and then we look for a founder who runs with it, or it happens kind of in parallel, that we look out for someone who has similar idea to what we have, and then we incubate them, or we help them on an even earlier time. And Erica is such an example, where the founder, it was just one guy who came up to us and had an idea which we had been coining as well at the same time. And we have another one which isn't disclosed yet. We can't release it yet, but there's another one now in our portfolio. It's exactly the same thing in the healthcare space.
Wow, nice. And Martin, you mentioned before that for your first business, you solved your own problem. Isn't that a certain contradiction, that if you have an idea and then you try to have someone else running with it, that they might not be as motivated as you with the initial idea because it's not necessarily serving their own problem?
That's a fair point. In the past, we have been fortunate to actually identify founders who were by coincidence or by plan or by purpose working on the same problem. Mm-hmm. And we didn't have to convince them that this is a problem and it has to be solved. Yeah. But I tend to agree, if you breed your own ideas and then you have to find someone and first convince that this is a real problem, it might be more problematic as opposed to the stuff that we had. We found people with the same idea, and it was matching, and then you speak the investment.
Yeah, because usually what happens, right? If it's not your own problem that you're trying to solve, then as soon as the tough times come up, you sort of lose the motivation to a certain degree.
Yes, absolutely, and that can happen. That can happen. I think we didn't experience this in the past, that someone lost the motivation because he didn't figure out it was solving his own problem.
Hey everyone, Nespresso is pleased to launch, in partnership with B-Lab Switzerland, the Swiss Start Cup Challenge. Aimed at startups, SMEs and students, this challenge will highlight and reward the best circular ideas in Switzerland. Do your services and products contribute to the circular economy? Let your circular ideas shine by joining the Swiss Start Cup Challenge at nespresso.com/startcup. The winner of each category will receive 20,000 Swiss francs to finance the development of their project. Plus, a B-Lab Switzerland mentoring program will be offered to the winners of the startup and SME categories. Then there's the jury's favorite, who'll be the star of their own video feature. And last but not least, the first 100 participants will receive an espresso machine and a year's worth of coffee. Don't drink it all at once. To participate, fill out a simple eligibility form and send us a video pitch presenting your project before July 7th. Learn more at nespresso.com/startcup. Good luck. So now, since we have you here as investors, of course, people listening to this, they also wonder, how do you actually make decisions? How can I convince investors to invest in my company? So first point, Philippe, you already mentioned briefly, team is super important to you. What else do you look for in companies that you want to invest in, or at least have a closer look at?
Yeah, I mean, you mentioned team. I mean, team is just really key. I think the other thing I always talk about is really the timing, and it's just by experience that I guess if we look back at the successful investments, it was really those two that mattered most, and maybe to the surprise of people, the idea is not really the key thing. I mean, otherwise, would you invest into a running shoe business, right? It's really the team and the timing that are important. And I think the fact that the founder or the founding team, that they are passionate about the product that they want to bring to market, that they have a big dream, that it's not about building a kaimu, as we say here, but about building a $1 billion business. I think that is really important to us, and that they have a certain experience in the domain that they want to go.
There are just so many follow-up questions arising out of your statements right now. I want to ask you, Martin, first. Timing, that's such a crucial thing, but often tends to be a bit overlooked. So do you have any tips on how founders can reflect or improve their timing, or at least better understand it?
If I could give you an answer, I would probably build unicorns. I can't give you an exact answer. Sometimes it's just luck. Sometimes it's a fact that you see a certain company or a certain field being more developed in one country or in one continent, and you just feel that there might be an opportunity to replicate it. Sometimes you see that in digital things, you tend to see that some countries are more advanced than others. And you can actually look at those countries and see what kind of models and companies were successful there. And then Bexio is one of those examples. Bexio is an ERP solution for very small businesses, and same as with shoes, there were like 400 of them in Switzerland. So why the hell would you finance the 401th? But I was living in Australia before that, and they had a company called Xero, and they were hugely successful, and I saw them grow their business in the Anglo-Saxon region, and for me it was kind of clear that a web-based ERP at some stage must become reality. And I remember that 10 years before, another friend of mine had the same idea, and I said, I'm not even looking at it. So I saw somewhere that stuff is developing, and then you just figure out it's probably the right time. But I can't give you a recipe. There's probably no recipe.
But I mean, there's certain, as Martin says, there's certain trends that you see, and in fintech, I mean, the digitization of financial services was something that is happening, that has been happening for a few years, and at the very early stages, the digitization of wealth management. That was something that we just saw coming. So the topic of building a robo-advisor was kind of, I think, timing-wise, was, I mean, maybe we were, I mean, there was also luck to it in terms of timing. We were even a bit early, maybe, but it's something that you saw, and we tried to get that right. I mean, we think about it, right, Martin? For example, with the CO2 monitoring, indoor CO2 monitoring, which we're doing with Erica, it's also a topic that we have been thinking about, and that where we feel that this is becoming important for companies, and it's maybe still early days, but it's just a feeling that this is a market that will develop over the next years.
It's at the end, it's a little bit of a stomach, So once every few years, you hit, or you've been hit by someone, and you just think, well, this is it, This is probably going to be it, and then you bite.
Yeah, you basically follow your gut feeling just to have the best chance to succeed, right?
Yes.
At the same time, if I think about what other guests said here on the show, I think really also what you just mentioned, like timing, you cannot influence it, but you can try to understand it or to see where it's going. But then as a company, and that's a good challenge for you as investors. Then you would try to stay as lean as possible, probably not have any investors on board in the early days to survive for as long as possible until the right timing sort of finds you. And that's what you would then probably call luck, because there might be COVID, which gives you a huge boost, which you would have never expected before. So that might be a good setup. Follow your own problems, solve them, and then stay as lean as possible until the timing finds you. And then you need investors to grow as fast as possible.
That timing might be difficult as well, because you never know when the rocket gains speed, and when you're in this lean mode for a long time, and you suddenly figure out it's the right time now, you're not going to be the only one. Yeah. And if you're the lean stealth, your ability to execute will be limited. And technology evolves and moves, so you still have to keep that running.
But I think what is true to what you said, Sylvain, is that in the beginning it's important to stay very lean until you found that product market fit. And we see that quite often, that mistake that people scale too early, or founders scale too early.
Yeah, and then you find out we're not there yet.
Yes.
And then you have to pivot, which is expensive because then you probably hired the wrong people, etc. And that's just not fun for anyone involved.
I've built, as I told you, I still build hardware and software myself. And I think I've built like a dozen tools and softwares and things. And at the end, with many of them, I thought timing's not right. It's not here, because as a venture capital or as an investor in general, you're leading edge. You're always leading edge. And leading edge doesn't mean you have a big mass, because you only have the early adopters who will follow you. Yeah. And you can't build a big business with early adopters. You just can't. You have to time, or you have to get it right by coincidence or any other feeling or structure to hit when the majority is ready to buy. And that's a tough game. Sometimes it's technology things that prevent you from executing. Sometimes it's marketing stuff.
And just to be clear, we've also made big mistakes in timing. So we've also, even you, Martin. I mean, you built a company, and you were completely wrong in timing, and it could have turned out to be the Spotify, right? I mean, music streaming, music on demand.
Too early.
And we were you were too early. There was no bandwidth available at the time, and music rights.
People laughed at me, I had streaming services, and they laughed at me and said, "What the hell is this?" And I, honestly, that was probably not just time. It was also being scared of executing it, and that's actually a good example. Spotify hasn't been scared to jump into a market that was deadly regulated, with right holders who wanted money everywhere, and they said, we don't care. We just raise the money and we just pay what they want. And the Swiss is more I'm still a Swiss, the Swiss is more cautious and said, how the hell shall I deal with all those claims from the right holders? So I better pull the plug, because people don't like it anyway.
And then this also comes back to what you said before, Philippe, thinking big, having these big visions and ambitions. Is that something that you feel is lacking a bit here in Switzerland? Are we not hungry enough?
Yes, it's definitely a trait of, I think, the Swiss culture is that we miss that a bit. I mean, sometimes I think maybe the US guys, they overdo it a bit. But there's definitely this big difference in terms of how the Swiss sell their vision and their dream compared to an Anglo-Saxon founder. I think that is. It's becoming less and less, but it's still the case.
Do you have any recommendations to founders on how to improve on that part?
Well, I think ultimately you need. It's difficult to what exactly to give a recommendation. But you need this bold vision, and maybe if you have a vision, think about what would be even bolder, and then go for that.
Yeah. Now, I also wonder, is there any red flag or absolute no-go in an investment where you say, oh, if that's the case, I walk away? Any experience or anything that you can share here, Martin?
For me, it's clearly non-committed founders. There is, when I see founders and they have another job,
No.
I don't even look at it. So either you're a founder and you want to build your business and you go and are happy to take risks, or stay where you are.
No.
For me, that's clearly one of the no-goes. Cap tables who look awkward and difficult already. You go out and you do 7 family and friends rounds with different conditions is typically something that we don't like very much.
Yeah, 50 angels and
50
7
angels,
convertibles.
yes.
And, yeah.
Anything else that you would like to add?
I think it's again values. I think if values generally, if they don't match, and it is also a certain gut feeling. If someone is too arrogant or
difficult people, yes, because the way we work, we need people we can work with. And if we feel that this is likely going to be difficult or challenging, we're the wrong ones,
Absolutely.
And we also want to have fun, right?
Yes.
I mean, we want to look forward to a board meeting or a conversation.
Sure.
At our age, I think we deserve to have a bit of fun.
Yes.
How do you test for these things? Do you, take them out for dinner or visit them in their offices, or how do you actually test for the personality and the character behind the founders?
We tell them a joke and see whether they smile. I think you typically you figure out after the first or the second discussions. You figure out what kind of guys, what kind of personalities are they, what do they want, are their ambitions right? Can we imagine to have fun with them, but also serious fun? They need to deliver. We want them to grow. We want to do that. But I mean,
yeah. I think you also get a feeling for if they listen. They don't need to have the same opinion on something, but they need to value your input and then give you good feedback. And I guess if after 1 or 2 meetings someone always knows things better in any case, then that's not a good start. Yeah.
So now I also wonder what happens if you, Philippe, want to really invest in a company, but you, Martin, say, I'm not so sure, I'd rather stay out of that deal. How do you reach a decision? Then you just don't invest, or how do you make a decision there?
We fight.
Yeah, it's really about convincing the other. Yeah.
I think we have to, and you feel that, we have a case at the moment. And this sometimes it happens that we are in a call or we have multiple calls and we're totally synchronized that we want to do that. Yeah. And in other instances, someone is really not hungry at all. Mm-hmm. And then there's just a little bit more work that needs to be done. And either you agree at the end, we don't have a formal process written on paper. But I think this is one of those mutual agreements that we have, is not to do transactions if one has serious concerns.
Yeah. And one thing that's interesting is that I'm much more naive when it comes to more technical opportunities because I don't have a technical background. So it often happens that I approach Martin and say, hey, this is the greatest thing. What we should invest here, and so at the moment it's the other way around. So Martin is pitching to me a B2C topic, and I'm very skeptical, and he's very positive.
Interesting.
So that's something that happens quite often.
We're going to follow up and see how that will end up. So I also want to talk about the learnings that you made along the way. I mean, you have a tremendous career, a tremendous experience. And first thing from you, Philippe, when we did the prep call together, you mentioned one big learning that you want to share with us today is doing things that don't scale. So you have a story that you brought with us to talk about that learning point.
Yeah, I thought about that one, and I think it's if you look at On and the history of On, they started in 2010, and at the time there was no real digital sales channel. There was no selling over the internet. So you really had to go out and convince the running store owners and the retailers of the product. You had to hustle, basically, which is something that Casper was very good at. And you had to think about different ways of convincing these owners. So there were a lot of runs over, so you called them up, let's go for a run, let's try them out. You did a lot of kind of guerrilla marketing things. So ultimately a lot of stuff that doesn't really scale. But what happens when you do that is that you learn so much about your sales channel, and then also the end customer, because you're there in the store, you're selling the product yourself. That's just proved to be incredibly valuable, and I think that's one of the reasons for the success of the company. And if I compare that to many B2C startups these days, they have this possibility of going the digital way from the beginning and buying customers with AdWords or whatever, Facebook, Instagram, etc. And often I think that's almost too easy. It's an easy way to go, and you don't really feel why, for example, why is the customer buying my product, which is something that's absolutely key, because very often that is not what you think is what you think is the reason is often not the case. So that's an advice that I would give, and if someone wants to listen more deeply into the topic, I think I mentioned to you, you can put that into the show notes. The Brian Chesky 30-minute interview with Reid Hoffman on the topic. Brian Chesky being the CEO of Airbnb. That's a great podcast that I would recommend to everyone.
We'll make sure to put that in the show notes. Would you, in that regard, also say that if you do things that don't scale, that can significantly speed up the process to get to product market fit?
Yes, absolutely.
Yeah. I think that's a clear statement that every founder has to take to heart now.
Yeah.
Martin, for you, the key learning that you shared with us in the preparation is basically Switzerland is too small of a market, and we already briefly touched upon the robo-advisor story that you were working on. Can you share the story and the exact learning with us here?
Yes. So Philippe and I, we actually started thinking about doing a robo-advisor. I think it was 2008, in the middle of the financial crisis, and it went on and on till 2010, 2011. And we really built, I built code. Philippe had meetings with banks, and we were really in advanced stages of starting the business. There was one thing that just stopped us from doing it, and that was the Excel sheet. So we couldn't make that business case work. Whatever we tried to put in, the financial model didn't work. And if a financial model doesn't work in Switzerland, or if the financial model doesn't work, the likelihood that you can actually build up a business is very small. So if not even the model works, it's getting a problem. So we then saw, by coincidence, a guy in the UK called Nick Hungerford, who built this company Nutmeg. And because we were dealing with the kind of business, we knew a hell lot. We knew how to build it, we knew how to structure it, we knew how to set up the product, and we were of some help for him. And we invested in that business in the UK. And the difference is really in the UK you have a market of 60 to 80 million. In Switzerland you have like 6 to 8 with 3 different languages. And the cost for building the product is exactly the same. So building a software for the UK has the same price tag as the one for Switzerland, but your revenue potential in the UK is obviously 10 times bigger. So you try to do it there, and that's what we did. And I spent, I think also quite typical, 6 months in the UK after they did Series A to help them in building the architecture right and the product and their business processes and stuff like that. So the market size is very relevant. And we had another example, I think Philippe mentioned it, more recent one where we thought a long time about stuff in the mental health space, tech in the mental health space, where we also almost built prototypes. And same problem, it's very challenging to make that business work in Switzerland, even in an Excel sheet. No good feeling about it. So almost same story. We found someone in the UK who solved that, and they also have a very innovative way of financing their idea. So we invested there.
I think that's a really interesting learning, because if you look at Bexio, for example, they built a very successful business here in Switzerland, but they focused on a pretty large market that we had here. But with the robo-advisors, when you take a share of the investment sum, you need so much money to make it work.
Yes, you need a lot of money, but Bexio needed a lot of money to work as well. There is some businesses they work better in smaller markets than others, and Bexio is an accounting system. It has payroll, it has tax stuff, it had VAT stuff, and these things are typically not very scalable. You can't take a product like Bexio and just copy paste it into Germany or France. It doesn't work. So there's a natural protection in some areas, and finance is another one of them. You can't build a robo-advisor in country A and then launch it in 27 countries. It's still today, it's quite a challenge to do. And in Bexio, when you have a business like Bexio, for example, you always have to think about going vertical or horizontal, and horizontal would sort of mean you scale geographically. Mm-hmm. So you keep your functionality relatively low, so there's no real deep functionality, but you go broad. So you actually make an invoice and you copy it and you launch it in France and in Germany and everywhere. And that's what the company originally wanted to do, until we told them, you're not going to do that, we're going to dig deep. And if you look at the Bexio right now, they are incredibly successful still, but they integrate relatively deep into the customer experience. So you actually get more revenue per client as opposed to a horizontal model.
Yeah, I think these are very interesting strategic takes that people can also take and reflect on.
It's always vertical versus horizontal, going deep versus broad. I think that's still a topic today, although many business models are better scalable than tax and ERP and accounting systems.
Now, if you look at your careers and where you stand today, Philippe, you both achieved business but also financial success. So one might also ask themselves, why do you still get up in the morning and don't just enjoy life, but also put a lot of stress and work on your plate?
The first days of vacation are always hard for me. You can ask my wife. I just need to do something, and I need a bone to gnaw on. It's just, I think, the way I work, and for me to be happy is to have something to work on. I can't just lie at the beach. Yeah, it's as simple as that.
How's that for you, Martin?
I don't consider this as work, and that may sound cheap, but this is the reality. I could tell people now, I'm not working. I don't get paid a lot. We don't get paid a lot in the fund. We're not getting rich in the fund. But we love it, And the thing is, I get up every morning and I love doing what I do. So for me, it's kind of not working. It's fun.
That sounds like a very good life setup then.
It is, in fact, it is. It's stressful. It's sort of unpredictable because whenever you think it's now a quiet period coming, you can be sure that in one of the companies there is a firefighter uniform required because something went wrong or so. But I love doing it. So it's just I'm passionate about technologies, products, building companies, and I don't even consider it as work.
Fantastic. So, of course, now we also wonder what's next for you and Session.VC. So, Philippe, you ever plan of expanding your investment focus, or what do you have in store for us in the future?
So, in terms of fund, we're, I guess, relatively close to being financed or having invested into enough companies so that the remaining money of the fund will be used for existing investments. So we will most likely launch another fund this year. In terms of strategy, I guess we will stick with investing early stage. That's just, again, we explained that just where we think we can add most value and which something we enjoy the most. In terms of structure, I think we want to work with even more founders who've already done it. We want to find ways to integrate them into our structure and network. That is something we're working on so that they again can contribute to the investments that we make and that they also have a vehicle through which they can invest. That's kind of, those are the things that we're working on.
And Martin, do you have any investment focus, like any industries or startups that you're particularly excited about these days? I know you tried to convince Philippe, but
I have a lot. I mean, I can't give you a list of names, but I have a lot of areas I'm really keen to see more stuff happening. I'm convinced that anything around machine learning and AI will become huge in a way that we don't even know. We don't even know how profound the impact of this will be in the long run. There's a few areas where we really believe there will be huge traction. But funny enough, if you look at our portfolio, it's typically you can define a sweet spot and then 2 weeks later you do an investment that is totally offside from everything that you have ever defined. Yeah. Just because it works with the people, it works with the strategy. So if I tell you that AI and machine learning is the right thing.
Yeah, I mean, that doesn't, I would completely agree on AI and machine learning, but that doesn't mean that we're going to be successful investors in that space.
No. Yeah.
So we've, in the past, and I think there have been many occasions where we made an investment and said, this is going to be a huge success, it's going to be a unicorn, decacorn, whatever. And it turned out to be a failure, and the other way around, something which we thought was absolutely not scalable became a huge success. So it's really hard to predict, and I think venture investing is exceptionally humbling business to be in. It's just a lot of gut feeling, luck, and yeah.
But no, I think that also plays very well with what you said at the very beginning. There is no master plan.
Yeah.
One door opens, one door closes. You go step by step, and there's no master plan behind the whole thing. Think
Correct.
big, stay humble, and you will end up in a good spot.
Yeah. Yeah, well said.
So before we wrap up this episode, we have 2 last sections for you. The first one is any resources or gadgets that you can recommend to our listeners. That can be books, blogs, podcasts, anything that you can think of. Do you have a recommendation that you want to share with us? Martin, maybe you can go first.
I need more time to think.
Okay.
Well, I like listening to long-form podcasts, something that Martin doesn't enjoy too much. We've had some discussions on that, but I don't think I'm telling your listeners anything new with Lex Friedman or Tim Ferriss and those kind of things. So I really enjoy them. In terms of reading, I typically read nonfiction books and not about business. So I try to read things about physics. So Max Tegmark, for example, even though I rarely understand the stuff at least to detail what he writes about. I just find these topics fascinating, and then I also read stuff about meditation and those kind of topics as well. Stephen Batchelor, he writes great books. So that's a recommendation. And I do have a business book that I am planning to read. I haven't started yet. That's I'm sure you know it. It's from Andrew Chen, the partner of Andreessen Cold Store Problem.
Yeah, he just released it recently, right?
Yeah, exactly. Yeah. So that's one I'm going to read.
Wonderful. Martin, anything came to mind?
Yeah, well, it did. But Philippe told, I'm not a regular podcast listener. Anything that's taking more than 10 minutes becomes difficult for me. Same with reading, though I started reading, but also I don't read a lot of business stuff or so. At the moment, I'm reading, for example, The Silk Road, which is about the Silk Road and the historical concept of the Silk Road, and I also read a lot of philosophical stuff. And then GitHub.
Makes sense.
Go to GitHub and see what happens there.
Perfect. So the very last part for you today are some rapid fire questions. So I either give you different options to choose from or a simple question. You have to make an answer in one sentence. So the first question is to both of you. We start with Philippe. Do you prefer to regret making an investment or regret not making it?
Probably regret making it, because it's really, you have to take really tough decisions, which you don't have to if you never made the investment.
What is it for you, Martin?
Total opposite. I regret it. For me, the worst is I look at the business and I say, what a crap, never works, and then 2 years later they raise 100 million and become a unicorn.
Missed opportunity.
I hate this. I really hate this. Despite
happens all the time.
All the time.
Yeah.
So, if you had to make a choice, founder or investor? I know you're an investor today, but who knows?
Probably too old for founder. Yeah.
So investor it is.
Yeah.
Martin, you know both hats very well. So founder or investor, what is your choice?
I would say founder.
Why?
It's the more creative side of things. There's more influence. But hey, we're founders as well. So we founded Session.VC. So
that's right.
Yeah.
Product or sales, Philippe?
Product.
Martin?
Yeah. Product.
Team or idea? That's a simple one, right?
Yep.
So team for you, obviously. Martin, too.
No-brainer team.
For you, Martin, VC money or bootstrapping?
Bootstrap.
Philippe?
First. So it's an unfair question because...
I get it, yeah.
It depends. If you can bootstrap. But if you need to scale fast, it's VC money. But take it from the right VCs.
Exactly, yes. And the last one for you today, Switzerland, Europe, or United States? I know I don't give you enough context, but if you had to make a choice, you can also explain in what context you make your choice. So.
For me, it's Switzerland. Even though I like the other places, I like the States, but it's my home, and I love the mountains, and so it's definitely Switzerland.
Switzerland, very, very clearly for me as well. Clearly Switzerland, yeah.
And then from Switzerland out to the world to build a big business.
Well, yes, and honestly, COVID might be negative for a hell lot of stuff, but it became easier to scale your businesses abroad thanks to COVID. You know, people are now used to work remote. They're used to work with online tools much more. Even complex sales actually work online. So Switzerland just gained a hell lot in abilities to actually scale their businesses outside Switzerland. So that's another reason to be in Switzerland.
I think we're going to see many more great exits and hopefully also IPOs out of Switzerland with that new wave of scale-up companies. So Martin, Philippe, thank you so much for joining us today. It was a real pleasure talking to you, and all the best, lots of success and happy investing.
Thank you very much. It was a pleasure.
Thanks, Silvan.
We hope you enjoyed today's episode. If you did, you can support us by rating our show on Apple Podcasts. This way, we can reach an ever-growing number of aspiring entrepreneurs.